The coronavirus will cost Australia at least $1 billion. Let's have a look. Hello everyone, Florian Heise here, Stein in hand as always, and I thought we'd have a look at this article from the ABC, which is discussing the fact that this coronavirus could cost Australia at least $1 billion, if not more. That's if it doesn't get worse. So, and this is from UBS, they're reporting. The coronavirus outbreak in China is taking a heavy human toll, but investment bank UBS warns it will also take a large economic toll, including in Australia. New research by UBS Australia's share and analysts and economists has attempted to identify the sectors and companies most affected and the overall cost to the economy. While they say it is far too early to know the total cost, just the group travel ban by the Chinese government, which will stop many tourists leaving the country during the peak Lunar New Year period, could directly cost Australia at least $1 billion in service exports. And today, our Prime Minister banned all travel or all planes from China with foreigners. Our GDP is still going down. But this tourism sector, that's going to take a hit. The international students is going to take a hit. Guys, is this what sends Australia into recession in this year? The bushfires, the coronavirus. But don't worry, housing's going up for some reason. However, if travel disruptions are extended or expanded to cover independent travellers, which has happened today, the cost could be much greater, the report warned. Global share markets have fallen only modestly since the coronavirus outbreak intensified, but some sectors such as travel and leisure have been hit much harder than others. Due to the virus, currently we expect only mild downgrades to global economic growth and corporate profits. Nikko Asset Management's chief global strategist, John Vale, wrote in a note. China will be affected the most, but as it is such an important country for supply chains and its demand for goods and services, especially its large tourist contribution, other countries will feel some pain too, at least temporarily. Well, just look at the Western Australian crayfish industry. The co-op there that is controlling 90% of the lobsters caught, it controls 60% of the lobsters caught, but 97% are sent to China. A decent portion of the absence of Lunar New Year spending in many cities and extended holidays will not likely be made up by future spending and production. The analysts warn these could also escalate dramatically if the new strain of contravirus spreads globally, like the swine flu pandemic of 2009, which infected 11 to 21% of the world's population. It infected a fifth of the world, guys. I had no idea it was that drastic. The mortality rate for the swine flu was 0.02%, whereas mortality rate for the novel contravirus are currently running at 2.2%. So let that just sink in. If we have the same proportion of the world infected by this virus and a much higher mortality rate, fifth of the world, what's that? Hang on, let's just do the calcs. 2.2, 11 times. That's shocking. Unlike the 2003 SARS outbreak, the new virus appears able to be transmitted before carriers are showing any symptoms, making it much harder to effectively locate and quarantine affected people. However, the UBS analysts also note that Chinese authorities have acted more quickly and decisively in attempting to contain the coronavirus outbreak. It is these widespread efforts to contain the virus that are causing the immediate short-term economic disruption as travel is cancelled and large swathes of Chinese industry remain shut down. So travel and education are vulnerable here in Australia. This means that even if Chinese and global health authorities are successful in limiting the spread of the new coronavirus, it will cause noticeable negative effects on the earnings of major share market listed Australian firms. UBS said there was an immediate and obvious effect on companies involved in travel with a large Chinese customer base. Australia's two biggest casinos, Crown and Star, rely heavily on high rollers or VIP gamblers from China. We estimate VIP volume could be down 50%, with some loss of play from both international and domestic main floor, UBS forecast. We believe this could drag financial year 2020 earnings per share by circa 10% and 2021 by circa 20%. Among travel agencies, USB said corporate travel is heavily exposed if companies continue cutting back travel to China, with Asian business travel making up about 20% of its earnings. The bank's analysts say Webjet and Flight Centre have much lower exposure to China and will only be severely affected if the outbreak spreads to more popular tourist destinations such as Bali and Thailand. If the current outbreak has the same impact on Asia-Pacific's travel as SARS did in 2003, UBS said Qantas could lose about $500 million in earnings and Virgin $60 million, while Sydney Airport could see a 5% downgrade in operating cash flow. Australian retailers and shopping centres exposed to the Chinese luxury market could expect a hit, with some of vicinity and centres operations popular with Chinese visitors. A slowdown in Chinese students travelling to Australia would hit listed companies such as IDP Education, where about 25% of enrolments are Chinese nationals, as well as Australia's university sector more broadly. UBS also noted that Treasury Wine Estates was vulnerable to reduced Chinese consumption, as that export destination made up 15% of its earnings. So how many companies? I mean, I've been talking about just our export dependency with resources on China. Look at all these other companies. Is this the lesson that Australia needs to learn to decouple? Demand for iron ore and coal is also likely to fall if large sections of Chinese industry remain shut down for an extended period in efforts to contain the virus, resulting in lower prices and profits for Australia's biggest producers. However, while the economy and many companies will lose revenue due to coronavirus, others stand to benefit. Gold prices are likely to rise as investors seek safe havens for their money amid economic uncertainty. And I know all of you in the comments can leave your favorite ASX listed gold companies. UBS said health-related companies such as vaccine maker CSL, protective equipment manufacturer Ansell, and ventilator producer ResMed could also see increased demand. Local healthcare providers Sonic and Helios may also see increased GP visits if people feel like they have coronavirus symptoms. So there you have it, guys. This has potential to have a significant impact on the Australian economy. But what I'm really worried about is how much of the world's population was infected by SARS, and the fact that we've got 11-fold increase in mortality rate with this virus. But at least people are now more aware and more vigilant. So hopefully that can have an impact. What do you think, everyone? Do you think this is going to spur Australia into recession? Do you think the virus will be contained, or the economic impact is overblown? Or do you think just the fact that there is fear out there alone, that is enough to damage Australia's economy moving forward? And will our politicians, will our leaders, will everyone learn that perhaps putting all your eggs in one basket isn't the smartest move? Anyway, guys, let me know your thoughts and opinions in the comments below. Thank you for watching. Please like, share, and subscribe. If you're a fan of the channel and want to help us a little bit extra, we have a Patreon where you can make a monthly donation. You can also join the channel here on YouTube, get access to badges and emojis. We have affiliate links with Independent Reserve for your crypto trading, Amazon and eBay for your consumer purchases. And we also sell our own merch here at HeiseSays, pocket squares on our website, find the link below, and PayPal if you want to contribute that way. Thanks to everyone who's helping the channel just by watching, subscribing. Take care, everyone. Have a great day, and I'll see you in the next video. Bye for now.